Hey folks, good morning. Anybody hear me? Can you hear me? Okay, great. Yeah, sorry, I've been having issues. I think I figured out what happened. Uh, Basically, I set up a a live stream session off my mobile phone, and it would only let me stream through my phone, so it was causing a little bit of issues. All right, we'll get started here in a second. Let me um, close my door real quick. Okay, we got 9 folks joining in, so hope everybody's having a good Saturday morning. Um, we'll talk today about really what happened in the market. I guess we'll dive in on some of the tickers that I've been holding in my portfolio, how they've been performing. Obviously, a bit of poor performance for the tech sector, especially AI related stocks. So we've had pretty much a very similar pullback to what we've seen in April. And I'm just thinking, what's going to happen next. There's been a lot of talk about possibly a rally next week. Some folks are saying continued bloodbath. Nobody really knows. We know there's certain folks out there who have a lot of money who have been shorting a lot of these tech stocks, and I guess the valuation on a lot of these were a little bit lofty, even though some of the earnings that were coming in were great. So I think a lot of folks who played earnings, um, you know, really got wiped out this week, especially anybody playing with options and on companies like Palantir and Robinhood and everything like that. You think that when a company has good earnings that it would cause the stock to increase, but instead we've kind of seen the reverse. So that's I guess that's a little bit a new one for me there. So but like I said, it's this volatility obviously showed a lot of shine a lot of light on reason we want to diversify outside of just the tech sector. And that's something that I've been looking at. Previously I've started to build up position in some of the gold pain ETFs. And right now I'm just I'm looking at obviously with how heavily I'm into WPay. And I'm overall I'm still bullish on all of that, but I think moving forward, slowly start to build up some other tickers. So, morning everybody here. Thank you liking the content, appreciate it. And do you live in Toronto? No, I live in the States. Okay, so we got 17 people here. Again, those folks joining new, apologize. I had to start a new stream because I've set mine up on mobile and it wouldn't let me stream off my laptop. So that's part of the reason that we're here. So let me see here, share my screen, and we will, I guess, start looking in. We'll just start with the portfolio here as folks are joining. All right, window. Okay. Okay, I'm going to share the screen here. Okay, very good. So yeah, this is what we've seen this week, and obviously, let me go to the 1 week chart. Um, it's been a bit of a pullback. So to say the least, I mean, being almost 10% down on the portfolio within 1 week really hurt. I know some folks are, they're saying that you panic too much, to just let it ride out, all that kind of stuff. I'm not panicking, but I think um, to acknowledge the pullbacks is important, and to keep an eye on the portfolio, especially with a portfolio that's very concentrated on just a handful of stocks. I think it'd be foolish to just set something up and forget about it and come back 12 months later from it. I'm not investing into the S&P 500 growth. That's something that I have my other accounts, like my retirement accounts, and those are all set up on autopilot. They get, money gets deposited, gets invested. I check that maybe once a quarter. I really, don't worry about it. I know that that all that stuff is long term, but stuff like this that obviously is very concentrated, especially very new funds. I mean, I know Round Hill's been around for a couple of years, but it's still pretty new. This isn't a fund that's been around for 30, 40 years and has a proven track record. These type of funds, and I know a lot of folks. I mean, personally, a lot of people got burned on funds like YieldMax, and we don't want to be in that same situation. We want to be vigilant, and I think that's important to keep an eye on it. So, all right, I'll hop over to the comments section here. Hi, Alex, and stream chat. Yeah, good morning, Austin. Fairly new to investing, only a few months in. Yesterday was a bit scary, partially with WPay. At work told me that the line, hold the line, and glad I did. But end of the day, was still down, but not nearly as much. Yeah, it's yesterday was a perfect V recovery. I mean, it doesn't get any better than that. Obviously, for those who had that perfect crystal ball and knew where that bottom was yesterday, you would have made out pretty good. And that's one of the reasons I've made that post. I don't know if you guys saw it. What are your predictions? Are we going to hit $50 today or not? So at first it was mostly no's, and then I guess once people start seeing that recovery, it started to turn more into yeses. So I was really glad that we ended the day flat, and the overnight actually picked up a little bit of steam. So that was good to see. Let me pull up just the WPay chart here. We'll look at that. Yeah, the 1 week on this. So on the WPay for the week, I was down 7.65%. On 1 month, I'm still down 9%. Okay, so it's a bit of a hit when you got quite a bit of money into this. If we look at the 3 month, and really that's the full historical chart for WPay, you can see that just the volatility we've seen. We had a very nice bullish run, and the volatility in the middle in October. I'm sure folks were not feeling so hot when we hit this $51 as well. And that run up really, I think, gave a lot of hope to folks who bought into WPay. Comparing that something like performance of Ulti, where that consistent decline, and I don't think we've seen a similar recovery in Ulti as we did, with WPay here, just the way that it bounces back. And I think the fact that it's not covered call ETF, it's doing the swaps and it's leverage. I think that's given us obviously that upside on the recovery. All right, let's see here. We'll hop over to the comments. We got 31 people here already, so good morning, people. I know for some folks, 8 a.m. might be a little bit early. For myself, Saturdays are usually my days to get some stuff done around the house. So I like to, to get that stuff done. So I don't want to extend this day as long. And again, folks who are joining, sorry for the difficulty issues. One of these days, I'll figure out how to live stream perfectly. So I'm trying to get my desktop computer to work with this live stream, but I was struggling. So let me grab my cup of coffee. 1 second. Okay, we'll hop over to the comments here. Good morning from Central Oregon. Good morning. Your stream keeps breaking up. I'm not sure what's going on. I don't think it's on my end though. Okay. Can somebody comment? Anybody else's stream breaking up? Okay. Well, if stream is fine here. Okay, good. All right. Well, maybe try rejoining, see if that would work. Okay, so we'll go over to the comments here. Good morning, everybody. Glad to end the tough red week. Yeah, definitely. Have you looked at CHPY? Yeah, this one was brought up last time, and this one was from YieldMax. Obviously, this is probably one of the better trends that you can get on a YieldMax fund. Again, I looked at it. I think last time we brought this up, I have a little bit of bad taste in my mouth after YieldMax. I'm a little bit hesitant with them. Obviously, the trend speaks for itself. It's moving up and sideways, which we want to see. I guess the only thing I don't know is the distribution. Let me just pull it up here on YieldMax. I'll share that. So YieldMax, we have distribution rate 40%. Okay, so this one is 0.99% expense ratio, and last distribution we had was 45 cents. Yeah, I mean, it's definitely, it's looking good on paper. I'm not gonna argue with people about that. Looks like it's semiconductor portfolio option income ETF. So it's holding. Let me see if I can. Let me switch over to that screen. You guys can all see it. Okay, so this is the YieldMax website for Chippy. YieldMax semiconductor portfolio option income ETF. Okay, so this is the distribution rate right here, 40%, which is, it's pretty good. I'm not going to argue there. Yeah, so expense ratio 1%, that's kind of standard in this industry. It seems like the payments looks like they have been pretty much consistent between, looks like 30 and 40 cents. There was a payment of 62 cents. So yeah, I mean that looks good there. Top holdings. Okay, this is what I'm interested in. So it has Broadcom, Nvidia, Micron Technology, Lam Research Corporation, AMD, KLA. I'm not sure what that is. Qualcomm, TSMC, Intel, and Applied Materials. Okay, yeah, I think a lot of these are very strong tickers. Obviously, like tickers like Nvidia and AMD and Intel. Those have seen a nice bull run, so that's pretty cool. Yeah, I mean it on paper. I'm not going to argue. It looks pretty cool. In a way, it's holding a lot of the same tickers that WPay is holding. Obviously, it doesn't have the leverage, and it is a covered call fund. So I guess I'd be curious to see how this would perform against like the underliers. Like if we were to recreate this basket and see how that looks. But yeah, I mean, I don't know. Uh, Maybe I'll buy a share or two next week. I've just been really this week. I've just been focused on everything that's happened in my portfolio. I wasn't really in the mood for diversifying into something else. So thanks for that. We'll hop over to the comments. Okay, Los Angeles in the house. Nice. I know you were loyal to YBTC. What do you think about BTCI and IBIT? Yeah, so I was loyal, not loyal enough, I guess. BTC. Okay, one of the reasons I picked YBTC because one, it was from Round Hill, so it was kind of shopping in the same place as the XCT QDT position and Maggie position that I used to have a lot of. I like that it was a weekly payer, and I think I did a video maybe a month ago or even more at this point where I kind of compared all of the funds in this sector on Bitcoin, and I think BTCI did come on top just from overall ROI. And uh, you know, my biggest thing was I was kind of hooked on that weekly payment, so I wasn't really like you know looking for the best ROI, which I guess doesn't really make sense. But at the time, I didn't even know that it was performing worse than BTCI, to be fair. But what I didn't like, and obviously, like, okay, so we know that Bitcoin's it pulled back quite a bit in the last month. So we went from like $125,000 to to $99,000, whatever it was this week. So it was a bit of a pullback. Now, and you would expect the ETF that's tracking Bitcoin to do the same. You'd expect it to go down, which I understand. My issue was as it was going up, we were not getting that same uh, trackment. So it wasn't really tracking that upward momentum, which I didn't, I wasn't happy about that. So, um, but yeah, I mean, overall, this started out $50 fund. We're down at 36, so it's down 25% since it launched in uh 2024, January 2024. So we're gonna come up on 2 years on this fund. Now it does pay pretty good, so no argument there. BTCI, I think it'll still be down a little bit on its historical. Actually, I'll take that back. So this one also launched at $50, and we've seen the valley, we've seen the rise, we see the decline right now. So obviously, from an ROI perspective and from preservation of capital, preservation of your NAV, BTCI seems to be in a much better position. So you can see here on the year-to-date chart we're down 12%, whereas YBTC, what was that on year-to-date? Down 27%. So quite a bit of a difference there. It's just the issue is like it's hard to come back from it. Okay, so when you continue to go down so much, you know, Bitcoin would really need to rally to like $200,000 to get back to your purchasing price. So I like BTC. I think anything from Neos I really like. My only issue is like, and it's more of a personal issue because I want more money now. So they're not looking to give me a lot, and they're seems like they're doing a better job, but um, it's more of my own personal greed. I think that I want the weekly payers, and I want more money up front, but then I kind of have to pay for it at the NAV. So yeah, I think we're gonna see what Bitcoin's gonna do. In this next month or so. Is it gonna stay flat at $100,000, just wobble around, or is it gonna continue to go down? I've been listening to a lot of like podcasts on folks who are who talk Bitcoin, and I guess one of the issues they're kind of speaking up about is the fact that a lot of institutions are looking at Bitcoin, buying up Bitcoin, and the true Bitcoin people, who are like the OGs of this sector, they're kind of getting discouraged by that because they wanted this to be like, cyberpunk money, like, screw the system type of thing. And now all the banks are pouring into this Bitcoin thing. So I don't know. In a way, it's like, yeah, it's cool that it's going to be more mainstream, but at the same time, it's almost like it's defeating its purpose of being its own thing. So I don't know what that means for the future of it. I don't think anybody really knows. We can all just speculate. So, um, yeah. So we'll watch it. I mean, I think if we see another pullback under 100,000, I mean, we're probably like on this resistance level at Bitcoin. This 100,000. It's probably like a mental number more than anything. So once we get, I think a few more days under our belt to see which way it's going to go. I mean, it's going to be a coin toss either way, but probably will not be a bad idea to start buying up some more Bitcoin at this discount. Okay, so let's jump over to the comments here. Okay. Started buying some BTCI yesterday as well as QQQI, SPY, thinking need to spread out a bit. Also bought the real estate Neos fund. Oh, cool. Yeah, QQQI is solid. I mean, if I was probably a more serious investor, QQQI, SPY, and Chill would be the ticket. I'm having too much fun chasing this yield, and sometimes it bites back, right? Neos real estate fund. I don't even know what Neos real estate fund is. Let's pull it up out of curiosity here. Let's see, ETFs. Okay. Equity, high income alternatives, real estate, IYRI. Okay. Monthly payer. Yeah, we know QQQI is the winner. 11% distribution expense ratio, 0.68. Okay. 11%. Yeah, I mean, that's not bad. I looked into, I don't know if you guys, I probably mention it all the time, but I have some real estate. And one of these days this year, I actually sat down, like trying to calculate what my, true ROI is between everything. And I think it was like 15% or something like that. But that's like with all the headaches. So if you can get 11% with no headaches, I mean, that's not bad. Yeah, so the maximum chart looks like, again, $50 fund. I mean, we're slightly down under. It's been really flat. Bit of a dip back in April, but yeah, looks pretty cool. I mean, again, this comes back to what you're chasing, right? You're chasing yield. You look at that 11% and you're like, yeah, Yeah, that's nothing. I can jump over to WPay and get my 60% or whatever, and then you get hit like a week like this week, and you're like, man, I wish I had IYRI, right? So, all right, let's see here. Move on to the comments. BTC is good, guys. Just Bitcoin's been going down, and all the altcoins have gotten completely destroyed. Not TH or BNB, but also a lot of, especially meme coins. Yeah, that's one thing I never got into was these meme coins or these altcoins. I mean, I back in the day, maybe like 2017, I messed around with it and I lost like a few $100, and I just kind of stayed away from it. I really did understand that it was a lot of pump and dump. So I think it prides on a lot of people who want to get rich and then they just lose what they have. Let's see. I had $25,000 in BTCI, and it was just too painful to look at my account and see it down 20,000, so I decided to stop buying it. Yeah, I can see that being discouraging when when your account goes down. So um, feel the pain. Sold Ulti at 520 and Misty at, or I'm guessing that's Misty at $18. Not a believer in MSTR as Bitcoin leverage play anymore. Yeah, I sold MSTY back in the summer. I didn't have a good fuzzy feeling about it, so I got out of that. Ulti, I've covered on this channel quite a bit. I've been on both spectrums of Ulti. I hated Ulti. I gave Ulti a chance, and then I hated Ulti again. So, um, let's see. I'm not a very experienced trader, but just from what I hear about exposed downside risk, a very high payout covered call, uh, CVC fund will more likely go down over time. Yeah, so covered calls, you are capping the upside. So that's part of the reason that a lot of these that are giving us a huge distribution, you see them continue to erode. Now, funds like QQQY and SPY are still covered calls, but I think the fact that they're paying monthly instead of weekly, and they're not, promising us the moon, they're targeting like 14%, whatever. I think that really helps keep up the NAV. So that's why they're more in line with their underliers. So yeah, that's something that I think, when I started in looking into all this dividend stuff beginning of the year, I really didn't understand much about, capping your upside, all that kind of stuff. I saw the numbers like, hey, you're gonna get, 30%, whatever. And I'm like, that's amazing. Like, how do you get 30%? So it was as I matured throughout the year, I started to realize, okay, this is how this stuff works. This is how they make money. This is the name of the game that you have to understand. I think a lot of folks obviously are not educated in that. They see, the yields on the main page of these fund managers, and they're thinking, okay, this is what the money I'm going to get, but they're not realizing that that money is going to cost them NAV. So it's like I always say, you're getting your money back on something like Ulti. That's all what's happening. Thank you for that. BTC will eventually bottom out at 50,000. Hold the line. Oh, interesting. 50,000. Wow, that'd be quite a hit if you're all in on Bitcoin. Yeah, I'm not sure. I mean, we had huge pullbacks on Bitcoin. It's not unheard of. So I'm not going to say that it's not possible. I mean, psychologically, it just sounds horrible. But we go back to 2021 November, which is this time of the year. We were at $60,000, and a sell-off happened all the way to $17,000. How do you hold the line there? Imagine you're this guy who bought in like at the peak right here. All your friends are saying how they're getting rich on Bitcoin. You got in at 60 grand. It went up a little bit. You're like, yeah, I'm a genius. and then the sell-off happens, and then you get weak and you sell off over here somewhere, and you're like, screw Bitcoin. And then a year goes by, and then this goes up to $125,000. Oh man, it's tough. I mean, I could see it. There's obviously support and resistance levels to everything. So that just this year, Bitcoin was down at $82,000, 83,000. That was the bottom back in April. And again, I mentioned this, I think, on the previous video or something, but I'm, before I was kind of thinking like, okay, Bitcoin is going to be a hedge against like volatility in the general stock market, but it tracks right with the stock market. This is our pullback. The tariff scare, Bitcoin goes down. It is absolutely not a hedge against what's going on in the market. It's a copy paste. So if we have a huge correction, I could see Bitcoin having a correction as well. Stuff to know. Okay. Principal dropping should be expected. Yeah, I mean, if you're getting a lot of payments, and that's something like XCT. Okay, I like XCT. I still have some. I think I've covered this before, but it's great. Okay, and the season, like let's say from April to now, it's amazing. No argument there. It's flat. It's sideways. This is what we wished Ulti was, and it happened not to be that. Okay, but we wished a sideways movement for infinity, like forever. But if we have a huge correction like we did in March and April this year, it will not bounce back because it's capped at the upside and it's paying out a huge amount of dividend. So you see, we were at $50 in February. We are at $43 now, and it's struggling to creep back up. Now, if we have a huge rally, like all-time high, SPY, S&P 500 is going up like a rocket. Sure, maybe we'll get back up to $50, but compare that to XPay. And people brought this up in comments. They're like, well, XPay actually is a better performer. It is 100%. I'm not going to argue that. Still, XPay did not bounce back all the way. Okay, so I mean, right here, $60. We are at $55. We still have not recovered. Compare that to SPY from Neos on your chart. 52, 52, flat, total recovered. Why? Because they're not paying out 30%. They're paying out 13% or whatever it is, 12%. Okay, that's why. So I mean, look, in this space of this is what this channel is about. It's like early retirement, passive income, that kind of stuff. For this community, the 4% rule is all that we are to expect from the market, like overall with inflation, all that kind of stuff. Something like this, like SPY, if again, we don't know what it's going to do in a bear. Is it going to be, just erased completely? We're not sure. We haven't got through that. These funds are not old enough to go through that. But a 10% correction like we saw in April, and we saw that total recovery, and it paid us 12%, I think that's great. I mean, that's being realistic. I like it. Okay. Again, on this channel, I'm chasing yield. That's why I'm swapping stuff around, selling stuff, whatever. I mean, in the long run, it's probably going to hurt me, but I have to try. So we'll hop over to the comments. If you're chasing yield, you got to go with ICOI, but the NAV erosion is great. I don't want NAV erosion. Okay, I don't. That's what Ulti is. It gives you more, but it's your money back. Maggie's on sale. What do you think? Maggie's a great fund. I mean, this is one that's like truly magical. It gives you a lot, and it it holds nice and flat. It is on sale, folks. 55 bucks. Bring your wheelbarrows. Okay, so this one we're at 57. Obviously, the pullback on the tech stocks. So yeah, I mean this fund has been really good to me. I've really enjoyed it. See, distribution yield 35%. Only issue again is diversification, right? You only have 7 companies that you're tracking, so very similar to to what we got going on in WPay on weeks like this week. Maggie could really hurt. Buying over time, dollar cost averaging is the way to go. I'm learning as I'm going along this journey. Yes, this is 100%. And I'll just tell you from my experience. Back in the spring, I sold my rental. I took the funds from it and I invested into these dividends. Obviously, I didn't want to I'm kind of learning as I'm going, but I didn't want to just sit on my money for like 2 years to like spread it out. I want that money to work for me. So I wanted to implement it. Now, when I implement that much money at the same time, I'm obviously not doing the dollar cost averaging. So it's like you're a little bit gambling on your entry. You're not sure. I mean, you could spread around a few weeks, but it's not enough spread. So that's just like the price you got to pay if you want to deploy all of your capital at the same time. But long term, I think if I'm continuing to like add to this account, which I'm not at this point, um, buying as I'm going would obviously make sense, and that's like what I do with like my retirement accounts. It's like every 2 weeks, from my paycheck, money gets entered. Buying at whatever the price is on that day, and throughout the years, throughout decades, it averages out, it smooths out, and all this fluctuation we're not actually even going to see. Okay, coffee time. Yeah, somebody gave the coffee symbol. Let me take a sip here. Bitcoin is a risk asset 100%. Yeah. Bitcoin's used by Hope that I think is going to go to 1 million, that it's going to go to 1 million per coin. Yeah, I mean, I don't think anybody thought it'd go to 100,000 per coin when it was less than a penny. So who knows? It, looking back, it's so tough to be hard. It's so easy to be hard on yourself, to say like, I wish I would have done that, or I would have done that. We'll only work with the information we have and with the risk tolerance that we have. So when I was messing around with Bitcoin, it was like around 17,000. Then it went down, and I got out of it. I mean, I only had like $1,000 in it, but again, if I would have held for 5, 6 years, I could have doubled, tripled my money, but I didn't. So, but it could have went the other way, and the story would have been different also. Maggie hasn't been on sale since it was released, just been in a range. Yeah, it's in the range, but it's a pullback. So if you want a DCA, now's a good time, probably. JPMO. Oh, another yield max one. Oh. Yeah, I don't like when this happens. Why does it do that? All right. Is this just on JP Morgan? Everything went weekly at yield max. Yeah, I don't know much about this one, but it's distribution rate 47%. It's been around since it's going to come up on 2 years here. Okay. Yeah, I mean, on paper it doesn't look too bad. I don't know how well it's diversified. So uh, on JPM, so you just buying JP Morgan Chase, and they're doing options on it. 1 year chart, 32%, year to date, 30%. So one thing I like to do is just do a comparison on this dividend channel tool. And this will account for dividends. So you can kind of see how much it's lagging or whatever. Yeah, I don't like the way this looks. Let me zoom in a little bit. So yeah, this is the issue, folks. Like you think that, that chart doesn't look too bad, but if you believe in JP Morgan, just buy the stock at this point. Look at the disparity in your total ROI. If you just bought JP Morgan, invested $10,000, you'd have 19 grand. If you bought JPMO, you would have had 13, almost 14 grand. Now, if you did not reinvest the dividends, 18 grand on JP Morgan and 12.8K on JPMO. So, yeah, that's how they get you. That yield looks good on that front page, but I mean, I don't know. I wouldn't buy it. If you believe in JP Morgan, just buy the stock, not financial advice. Okay. Agree. I think for the simple DCA strategy funds like QQI SPY should make up a bulk of it, with things like XEQT, Pay making up smaller portions. I know, but we want that yield now. I know. We'll see. We'll see. Hopefully this WPay doesn't fail us. DCA seems to be way to go, but that percentage down you suggest lately. Buy at the dip only for dip to go even further. I'm leaning on over 3% down, but maybe higher. Yeah, I mean, we don't know when the bottom is, so it's tough, and that's the whole point of DCA. You buy a little bit of bottom today, and then there's a new bottom tomorrow, so you buy a little bit of bottom tomorrow. In theory, the 0DT should work out great. Most moves happen overnight, so they can capture the move and sell zero at the money call to capture any further move. We hope Roundhill sells the correct strikes. Yeah, I mean, you're really putting your hope into Roundhill to do the calls properly, and that's what they charge you for. If you don't want to do your own call options, that's why we're paying them the 1%. Almost any stock was once thought to never be where it is today. It always turns into I should have bought there. Yeah, almost any stock. I mean, some stock is not. Some stock goes penny stock and then just goes away. So, and that's why they say you should just buy the index, right? So you spread your risk among all of the companies. Um, I'm super happy when I learn about margin buffer helps me DC. I'm front loading my W2 income. Really cool. Yeah, careful with margin. Obviously, on weeks like this week, being over leverage can clear house. I ended up just going mostly with CLM CRF lately because the drip at NAV gives you 22 for free, basically. Yeah, cool. I mean, I had those funds in the spring. I think I talked about them last live stream we had. They don't work for me because I'm looking for income now, and it's like the whole fund is built on you reinvesting. So I'm not interested in that. Do you think WPay beats something like Chat ETF from Roundhill long term with dividend reinvesting? Um, Yeah, I mean, we can pull up chat. Yeah, I had this position for a little bit this year. I got out of it when I was repositioning everything. It was doing great. Obviously, there's no dividend behind it, so it's just growth. But it was doing great. I mean, they had a nice blend in here. Nvidia, Google, Microsoft, pretty much the same stuff that WPay has. This one has Oracle in here, which WPay does not have. So it's a great company. It's I mean, obviously it's all tech, it's all AI stuff. So you just saw that on this chart, the pullback. So let's say 5 day down 8%, 1 month down 4%. Yeah. I mean, we were at $68 October 29th, down to 62. Bit of a hit. Yeah, I don't know. I mean, you don't have to, buy dividend stocks to make income. You could buy growth stocks and sell your shares. So it's all how you want to play the game. I think there's a little bit of a dopamine rush knowing that something's getting deposited into your account on a Friday and you got paid, with the dividend. So when you hold a stock that just continues to grow, you just kind of don't feel like selling it. So I understand why people invest in dividends personally. So um well, if you want income now, dividend reinvesting isn't on the table. Yep, it's not. I think one to watch for now is Bull. They just IPO'd a few weeks ago, and they would be considered an infant of what Robinhood is now. Time will tell, but it's really worth watching. I'm guessing it's another broker. Oh, this Webull. Okay. I was like, what is Bull? It's like some kind of new thing. Yeah, I have the Webull app. I got it, I don't know, like last year for some reason. Um, I really don't use it much. It's very similar to Robinhood. I mean, I'm not gonna argue there. Um, yeah, right now it looks really cheap. It's the way that this space is exploding is just insane. And I was just listening how every single broker is now adding all this like sports betting and like market predictions and all this like this whole gambling thing that everybody's adding. I'm not sure if Webull has that, um, but like Robinhood does, and like in a way, kind of, like, that sucks because they're just getting people addicted to gambling, and they're going to be making all that money. But um, yeah, I don't know. I mean, obviously, there's lots of different brokers in this space that have been around the block for a while. There's new ones, there's smaller ones. There's what is it like? There's Moo on Moo. Uh, yeah, so Moo. I don't know. Are they public? Uh, guess they're not. Subsidiary of Nasdaq listed fintech company Futu Holdings. Are they Chinese or something? Yeah, I mean, look at this one, up 133%. All right, folks. What time is it? 9:01. We'll hang out for a few more minutes. I only wanted to do this for an hour. I know I had a little bit of a late start, so I appreciate everybody being here. 57 people. That's amazing. So, all right. Let's see here. I wish WPay would dump uh, MSTW and COIW when crypto's lagging. Those two act like boat anchors for the entire fund. Yeah, MSTR. I was just, I think I talked about that last video. I don't like that chart, right? So we had, let's go to 1 year. We were at $473. We lost like half. If you would have bought at the peak here, you lost half your money. It is obviously bringing WPay down. I'm not going to argue there. You could make your own WPay. And that's something I thought about. Like, instead of having WPay, why not just buy ones that I truly believe in and can the rest of them? That's possible. Uh, Again, you might see more volatility between them, so you just have to kind of keep that back in your mind, like they're all going to balance each other out. But that's also doable, to just buy the weekly funds that you believe in, and maybe make that like 20% of your portfolio, between the weeklies, whatever you pick. I don't know. I thought about it. So, um, coin. I don't know. Did we have like a huge rally on coin? Has it like pulled back a lot or what? Yeah, all-time high 410 looks like. Oh, not all-time high. 420 back in July. Pulled back to 309. Yeah, I mean, overall, this trend from 2023, like it is sideways and upward movement, but the huge amount of volatility, it's like you have to be able to withstand that. So, like this is like something like you don't want to use margin on, like just the volatility is insane. Is it going to bounce back? Well, obviously, all the crypto stuff, like the way they got wiped out, I can see why coin stock's not doing great, because it's like faith. People are losing faith in this coins. So it's the market decides to sell off Coinbase, because their profits are made from people trading. Um, I stopped using Webull because it's China based. I didn't like that. Yeah, it is China based. Everything we buy from Amazon's China based too. It's tough, but you know, I think as a consumer, you have the right to decide, which industries you want to support, which countries, that kind of stuff. So if you're not comfortable with a company that's Chinese to hold your financial information, it makes sense. Um, I've been tempted to start a position in Webull, but if this correction continues, I think it will go lower. Yeah, I don't know. Have a good weekend. Yeah, you too. Thanks. Um, I didn't realize you were Eastern time, so I was thinking you would start at 8 a.m. Central time. Yeah, I am Eastern time. So I apologize. I had some issues again streaming this morning. If I might do a poll after this sometime today to see what time works best for people. I don't know where my audience mostly is. If most of you are West Coast or Central US, then I might bump this up to 9 a.m. Um, but yeah, we'll get a poll going. So welcome, Paul. Thanks for joining us. Um, I've got a buffer at 62%. I'm going for 75. It's nice to be able to buy some cheaper shares when the buffer so high. Yeah, definitely. That's one thing that I was kind of feeling good about last couple of weeks when I lowered my margin to $50,000, and I was, pretty happy about taking opportunity on some of the dips, just like throwing, a couple grand here, a couple grand there, buying up on the dips. But then, again, I mentioned this in previous videos. This Monday, I was like, all these earnings are coming in, everything's looking good. Let's buy more WPay, and then a sell-off happened. So absolutely the worst time to increase my margin position. So um I have to like set up some kind of, I think Robin actually lets you can set up like a limit. Like it won't let you like use more unless you like go and adjust it. So maybe I should do that and just kind of have a little bit of control over myself. M1 is nice, just in a different way. Um, yeah, so M1 actually reached out to me because they wanted me to like partner with them, and I started asking them about their brokerage, and like everything I was asking them, um, wouldn't fit with the bill. Like they don't carry like any of the Roundhill funds. They don't carry like any of the Neos funds. They only allowed to trade like twice a day, and you have to like call in for them to like trade for you or something. It's like M1's like really built for like set and forget it type of investors. So um, I don't know, not my cup of tea, but maybe maybe if I don't touch it, maybe I'll make more money. Do you miss Fidelity at all, or still liking Robinhood more? Oh, okay. So I'll say what I miss about Fidelity first, and I'll tell you what I like about Robin. So Fidelity, I like. I had like a personal agent, so I had a phone number. I could call the same person if I had any questions, any issues. They would reach out to me once in a while. They'll, like, hey, how you doing? That kind of stuff. Um, I like that person, the personability of Fidelity. It's a lot more mature for like more mature investors, I think. Um, I do like some of their dashboards. Like this is one thing I don't get in Robinhood. Like if you've been with me this whole year when I used to use Fidelity, like there was a page in Fidelity where you can see all of your tickers and how much dividends you're getting, and it's going to calculate what you're projected to make that year. So I like that. Now I kind of have to like rebuild this system in Excel myself because I don't have that in Robinhood. The other thing I missed is just the total layout that they had. Um, of all the funds that you have, like the way that it presented that information. It seemed more clean to me. I mean, you can kind of get um the same view in Robinhood Legend, but it still feels different. Like it felt more natural in Fidelity for me. The banking feature was stronger with Fidelity. I do have like a debit card that they gave me with Robinhood for the cash account. With Fidelity, I like having the checkbooks. Again, it's a lot of people like, I don't even know the last time I wrote a check. I write checks quite a bit. Like I'll write at least like 2 checks a month. So having access to checks was amazing. Like now, for me to write a check, I have to move my money out of Robinhood to a local bank, and then I could write a check. It's like it requires me to think ahead like 4 days between that money transferring over. Um, what I did not like about Fidelity, well, one of the reasons I left it was the prison they put me on. So when I was trying to trade Ulti, I had a wash sale, and they basically put me in a restriction on margin for 30 days. So they told me I can't have access to margin for 30 days. Um, I did not like that. So I had a pretty low rate. I didn't really leave them for the rate as much as that event that happened. I did get a much better rate at Robinhood, but at Fidelity I had 6.375%. So it was not bad at all. But back then I was kind of more like crazy, so I used a lot more margin. nowadays, like that 1% not really going to move the needle. So I still have Fidelity. I still have like all my long-term investment accounts in there. So um, Robinhood, their mobile platform is 1,000 times better than Fidelity's. Just the way you're able to trade options, the way that you're able to view the charts, set limit orders, all that kind of stuff. It's 1,000% better than Fidelity. So I'll just say that for mobile, I think Robinhood is amazing. Um, but that's also the issue is like you can get a little bit too trigger happy, and because it's so easy to do stuff, you can always like be shuffling stuff around and take losses when you shouldn't be. Um, Thanks. That twice a day thing, what keeps me away from M1? Yeah, that was definitely a hard pass for me. Uh, is it hard to pay taxes? I don't know. We're gonna find out in January. This is my first year of like actively trading and doing all this stuff, so I'm sure I'll have a few videos on that. But I don't think it should be that bad because all the brokers they give you a report, so we'll have everything kind of lined out. I think it's just a matter of plugging that in. So we'll see. I have Roundhill in my M1. I have it set and forget. It has rules set that send the money into different areas. Out of 5 years, I used to just enough margin to open Robinhood. Um, yeah, yeah. I didn't like because they didn't have much in options. They didn't have like you couldn't day trade anything, so I didn't like that. Good morning. Sorry. Good morning. Hey, Max. Good morning. Write checks. What the heck? Yeah, I write checks. Yeah, I mean, I had like a lot of remodeling done in my house, so that's how I pay my contractors with checks. Paying like property taxes, I use checks for that. Um, like if my kids have some kind of event in school, oftentimes I'll write a check for whatever soccer thing or whatever they're using. So um, maybe you can use margin pay off the taxes and have dividends come in and take care of that. It's just an idea. Yeah, I mean, you can definitely do that. Um, I, I mean, I've taken a lot of losses this year, like after selling some things at a loss. So I hope some of that is gonna offset some of the gains I had. I don't know. We'll find out. Um, and one is slower to add new funds and allow margin. Yeah, I mean, when I asked them about Roundhill, I gave them a few tickers. They're like, "Yeah, we don't have that." So that was like a no-no for me. All right, guys, it's 9:15. We have almost 60 people in here. I spent over an hour with you guys. Definitely would watch a tax video if you put one out when it's time. Yeah, I mean, none of that's going to be tax advice. It'll be more of like lessons learned and like, holy smokes, why did I do dividend investing now? I owe $30,000 in taxes. Hopefully I don't make that video, but um, with a lot of these being return on capital, I hope that's going to lower that um, the the taxes that are going to come in. So um, yeah, we'll see. Yeah, thanks a lot. Hey, everybody, thanks a lot for hanging out today. Um, Appreciate it. If you guys like this, again, I'll set up a poll. We're gonna see what time works best for you. 8 a.m. Eastern time, 9 a.m. Eastern time. Um, you know, if uh, if I get majority of people voting one or the other, I'll adjust my time. So I hope you guys enjoy it. Again, I'm just a guy on YouTube, so take my stuff with a grain of salt. I'm here learning with all of you. I appreciate all the engagement. So um, everybody have a great weekend. Enjoy it, and yeah, take care, folks. Stay vigilant.